Let me welcome our first witness, Mr. Douglas Doerfler. He is the president and CEO of MaxCyte in Gaithersburg, Maryland. MaxCyte is a research and development company that concentrates on cell modification. He's testifying on behalf of the Biotechnology Industry Organization. Founded in 1993, Bio provides advocacy and services for more than 1,200 members worldwide. Welcome. You'll have 5 minutes to make your presentation.
Thank you, and good afternoon, Madam Chair Velasquez, Ranking Member Graves, and members of the committee. And thank you for the opportunity to testify in front of this committee during a very, very difficult time for the research and development-based companies that I represent. As mentioned, I'm Doug Doerfler. I'm founding CEO of MaxCyte in Gaithersburg, Maryland. We're a research and development company developing technologies to modify cells, make cells into drugs, to treat diseases like pulmonary arterial hypertension, leukemia, and brain cancer. We have products in clinical trials today. We have about 20 people in the company, so we're clearly a small business. I'm also associated with Bio on their board of directors. And of the 1,200 companies that are members of Bio, more than 90% are considered small companies. So the biotechnology industry is an industry with small companies. We're small, and what's important about this is our inability to raise necessary capital to maintain the research and development programs that we have as companies at Bio. A little bit about the industry. We employ directly about 1.3 million jobs in the U.S. and indirectly over 7 million jobs. And these are particularly high-paying jobs with the average employee making two-thirds more than the average private sector job. According to latest data, 1/8 of the U.S. biotechnology companies that were active in 2008 are either bankrupt today, they've winded down or become acquired. And since January of 2008, over 125 biotech companies have laid off over 10,000 scientists and employees. In doing so, they've dropped many important programs. These are clinical programs that we have data on involved in therapies for HIV, cervical cancer, multiple sclerosis, and diabetes. 40% of the U.S. biotech companies have less than 1 year's worth of cash, and about a quarter have less than 6 months' worth of cash. And the total amount of capital that we raised since 2008 has fallen 55% from 2008 to 2009. And we commissioned a study with biotech investors, and over 80% of investors in the biotech area have significantly altered their ways of investing, or are no longer investing in high-risk, high-reward companies like those found in the biotech industry. What's also disturbing is investments by angel investors in the life sciences industry has all but disappeared in the last year. There are just no angels out there to help support some of the earlier stage companies. So there's little oxygen in this industry to survive. And once these companies fold up or we stop clinical programs, it's virtually impossible to revive these. So once we stop a program for a particular therapy, it's very difficult to get them back on their feet. So the decline of the biotech industry jeopardizes not only the patient population, but also our competitive edge in the 21st century global economy. Biotech is one of the few industries in the world that the United States is the predominant force in. This is for developing therapies, it's for developing alternative fuels, and for developing alternative food sources. So the question, how can SBA provide assistance to early-stage, high-risk, high-reward small businesses like mine? This is a biotech-focused discussion, at least from my perspective, but I have colleagues in the alternative fuels area and in the information technology industries, and they share some of the same concerns that I do. First, the SBIR program has traditionally been enormously helpful to small biotech companies. And after the 2003 ruling, which has prevented many of our small companies from participating due to their capital structure, there was a recent report issued by the National Research Council that stated that some of the most promising small companies, small innovative companies, were excluded from this program. Until this is addressed and small U.S. biotechnology businesses are allowed to compete based on science and the potential to benefit public health, and not on how many investors we have or how many minority investors we have, this program will not achieve its maximum impact, which is helping high-risk, high-reward companies to succeed. Access to many of the SBA programs we heard about in the earlier panel that could help small, high-risk, high-reward technology businesses are unfortunately limited. Most of our companies, most biotech companies, do not have any revenue resources. And it usually takes about 10 years for us to actually begin to bring in revenues. So it's impossible for us to take advantage of the SBA Premier programs such as Preferred Lender or the Guaranteed Loan programs. The SBIC programs also tend to focus on companies with revenue streams that are beyond the startup phase. These companies are typically lower risk and lower gain companies. And BIO would like to work closely with the committee and SBA to determine if there are ways in which this program can be improved to stimulate more investment in high-risk, high-reward industries like biotech. In order to develop programs to promote our innovative high-growth sector, we need to talk about the business model for just a minute. And there's really 4 elements of this. One is there's a lengthy amount of time, lengthy time horizon associated with long time horizons. Our collateral is not assets, it's intellectual property, and revenues are not significant for about 10 years. So what we're here to do is examine these potential opportunities with SBA and work closely with you to figure out ways for us to help in developing new funding sources for our companies. Sorry.
Thank you.